Welcome back to Bunnex Investment Group. In this video, we are going to talk about the M15 stop hunt entry, which is one of the most good strategies for intraday trading, as well as passing prop firm challenges and managing your funding accounts, as well as your personal accounts, of course. So basically, if you trade without seeing the market do something first, then you are risking it all. By that, I am saying the market should first give you a hand or an idea before you actually place a trade. If you are someone who actually trades before it does, you are in predictive mode, whereby you are actually trying to tell everyone where the market will move next. So the motto of this video is only trade after they hit stops. By hitting stops, we are saying they should induce after induction, then they hit stops, and then you enter. Without that, no trade for you. Alright, so basically we are going to start off by defining the market maker's daily template. How the daily daily flow looks like. This is for the market for a valid trading day. Not all days will actually look like this, but a valid trading day will actually look something like this. So in this particular case, I have these blue boxes and they are representing consolidation phases or Asian session ranges. So usually we know that in Asia, in the Asian session, we will get a ranging phase whereby the markets will actually be going up down like this illustration. So this up down is basically to actually induce traders to go long and then induce traders to go short, long, short, and then afterwards they'll actually calculate how many are going long and how many are going short. That is when you'd see the market actually rushing through out or faking a breakout of this particular range. So this particular move to the downside is what we call an induction move, which actually allows or induced sellers to get into the market, as well as hit the stops of those who are longing within this particular range. So this particular move, induction as well as stop hunting, is the one that we want to see before we take an action. But if you were to go straight over the charts right now, you'd see that there is a lot of subjectivity, and I'm going to give you some rules and parameters to follow so that you'll be able to capture these particular points with high accuracy. So the red point is this red dot is actually signifying where you will be looking to get into the market or to participate within the markets, and you will be actually looking to get this particular move or flow to the upside, which is a long sustained run. And then this actually represent the following days Asian session. So a valid trading day should look like this, and if it doesn't meet a criteria that looks like this, you should actually leave it like that. All right, so basically this is a pictorial view of the trading day that we've been talking about. This is the Asian session range, and after that Asian session, we can see a move to the downside like that. And then all that we want is to capture this particular point so that we have a flow like this up to the following Asian session range. So the market makers starts by accumulating, as what I've said earlier on, so that they build liquidity. They cannot buy or sell like what we do because they have access to large amounts of capital. If they buy, usually they'll crash the market, or if they sell, they'll also be able to crash the markets or to lose a lot of money doing so. So they are smart enough to start accumulating orders. They would rather die without trading if there are no enough orders to fill their enough positions to fill their orders. So the accumulated traders will need to be induced as well as get taken out before they decide to push their intended direction. So we are saying what we want to do is to capture this particular move or the long sustained run to the upside like that, where we would have captured this starting point. So a lot of people deny this, but it is the plain truth you need to accept and try to trade along those big sharks. So of course, there are a lot of theories out there whereby people would say the markets doesn't move like that, there are no market makers and so forth. But the minute that you accept and try to trade in line with these big guys, that is when you'd see a little bit of some consistency. So this image shows how these guys try to achieve almost every time when the market moves. So it might be an M5 time frame, it might be an M1 time frame. It's unfortunate that on those particular small time frames there is no an Asian session range where we initiate our analysis from, unlike on the M15 going forth. Alright, so here's the strategy explanation. I'm going to simplify as much as I can, and then I'll provide you some examples so that you'll be able to apply this by yourself. So basically the first step is to observe the Asian session range, whereby you'd see the high and low of the Asian session clearly, and you can basically mark the high and low of the Asian session range manually, whereby you know that the Asian session starts at this particular time and ends at this particular time. It's unfortunate that I cannot shout the time because we all come from different parts of the world. So the range must be above or below the 200 EMA. So the 200 EMA is basically there to show us the trend where we want the where we want to take the trade for or towards. So if the Asian session range is below, it means that Asian session range like this is Asian session, and this is 200 EMA like this. If it is below like this one, we are looking for sales, right? We are looking for sales, and the vice versa is true, whereby we are seeing the Asian session range is actually going to the upside, and sorry, the 200 is going to the upside, and we have our Asian session range. We want to see buys like that. So trigger feature is the TDI shark fin above the range if it is a sell, and exit is at yesterday's low or yesterday's high. We're saying if we are actually want to sell, we'll actually need to see a TDI shark fin to confirm this particular stop hand, and then our exit should be at yesterday's low. Let's have examples to understand this. But before we dive into examples, I want to personally invite you to my one-on-one mentorship program. That is, if you are serious about turning your trading into a powerful and sustainable source of income, this is definitely for you. So use the link in the description. I only take a few students on a first-come, first-served basis. Be part of this program if you are serious. All right, here's the first example. And in this particular example, we can see this is the Asian session. Just to define all the things that are on this chart, we have the blue boxes, which are the Asian session, the 800 EMA, the 200 EMA, and we have the TDI, which is the most important part. So the most important parts is first we have Asian session, then the 200 EMA. These are the most important parts, as well as this particular blue tracer, which is marking yesterday's low. So here we can see on this particular Asian session range, the market went to the upside, went to the downside, and then when it went above, we want the market to go above the Asian session, that is above this level, this yellow level, and then at that particular point we want it to coincide with a TDI shark fin for us to enter, and we look for a candlestick reversal pattern in that particular zone and then enter. We can see the market actually went to the blue tracer, which is yesterday's low, right? Here we can see Asian session range perfect right below the 200 EMA, meaning that we are looking for sales, and then after that we can see the market going above the high of the Asian session, which is this one, and after going above the high of the Asian session, we can see the market, of course, created an M pattern, but later went to the downside like that, which is what we want to see. Here we can see again, this was on odd CHF Asian session right below the 200, and then after that the market goes above the Asian session, which is here, and after going above the Asian session we can see the market go straight to the blue tracer, which is yesterday's low like this for our exit. Then last but not least, we can see we had this big Asian session. After that big Asian session, which is above the 200, meaning that we are looking for buys, we can see the market came to below this particular low of the Asian session. Here, that is where we want to get involved. and then the market went to the upside, basically like that. So as simple as it is something that can give you consistency if you are able to repeat this over and over again. We know that trading will require you to repeat over and over again and to repeat that particular system consistently. Thank you for watching, and check out our free Telegram channel, which I'll leave the link in the description box below. Be part of that because I share a lot of stuff in there. Have a good day, and I'll see you in the next one.